Yeah, good morning. Back again. Yeah, we're still tracking US oil. That's WTI, or West Texas Intermediate Oil, together with Brent. So at our last view, at our last checkup, we just started on weekly just to see where our draw on liquidity is likely to be or would likely to be. So basically on weekly, we saw that oil has been bearish. Yes, since on weekly you could see we've been having a bearish order flow. Bearish order flow signifies presence of bearish fair value gaps on weekly, which continued to repel price downwards. So the presence of bearish fair value gaps as price breaks structure to the downside, displaces the downside, it creates bearish fair value gaps where price taps to continue with the continuation. So weekly bearish order flow, and at our last checkup, we saw our weekly order flow leg, which was this one, and the only fair value gap that we saw, which is currently or which repelled price, was this weekly fair value gap. You could see, yeah, this is our weekly fair value gap, yeah, which repelled price on our weekly AVG. So you can see, yeah. So this is literally, yeah, sell side imbalance, buy side inefficiency. That's the weekly IVG. It signifies that we're still selling. Sellers are in the lead because this same fair value gap, which is a better fair value gap, is continuing to push price towards the previous weekly swing low. This is our draw on liquidity. This is where we're targeting. So that's knowing the direction. Yeah, you can know it by the order flow, and with the help of the PDRA, it's easy because when you're trading PDRA, you trade them within a trading range, a current trading range, like we saw on weekly. We have our range high, range low, and the PDRAs in premium that we could see significantly. Those are the ones which are likely any of them is likely to push price towards the drawn liquidity. So we have a fair value gap, and we have an order block here, and we have also a swing high. So those are the three premium PDRAs which are present, and also the fair value area. Actually, it's here also. It's one of the PDRAs in premiums that we had. So you could see oil is still in play, it's still short, and the current PDLA, which is weekly FVG, is the one which where price reacted off of, so that it continues to draw towards the what? The weekly swing low. On the daily, we saw that price keenly respected that weekly fair value gap, and H4 shows you clearly that once it respects the bearish fair value gap of the weekly, on H4 it gave us a change in momentum. That's a change of character. That's a chalk. So giving us a chalk signifies a trend reversal. First of all, we got the first reversal 2 weeks ago. Yeah, a chalk break of structure. Then here we continue to see this was our last break of structure on H4, and you continue to see price again shifting back upwards, giving us another break of structure. So you could call this an internal chalk. You could see, yeah, it shifted back. This shift was a correction move. Yeah, this was a correction move to mitigate back the origin. This was the origin on H4. It was a mitigation. It was a complex pullback to mitigate back. So institutions had to mitigate back their losses so that they can be able to close that break even at this exact supply area. This was a mitigation move. Then after that, now we resuming the bearish trend, as you could see, is still on. Yeah, after the mitigation, understand? We still have a choke. Let me shift this choke to this current one. After a choke, you know there's another shift, because simply you could see even this dynamic trend line, which is acting as a support, was broken on H4, which means the first confluence was a breaker block. A breaker block was present when demand became supply. Definitely, when demand got broken, this is a breaker block. You could see, which resulted into our choke. So basically, if I would love to sell oil, I would want to look for premium areas, yeah, where price can react towards before continuing the sale. So this is our current range, swing high, swing low. This is our current range. If you are to use the Fibol, you could drag it from top to down. You could see the areas of premium always above 50.1, 61.8. Significantly, normally for me, I don't take entries around 50 or 61.8, because these happen to be areas of inducement or of liquidity. I normally prefer taking positions above 61.8 or 70.5, 79.0. So basically, yeah, this is what I'm trying to say. And according to what we see here, the premium areas that we see, we have the order block, we have the fair value gap. You could see the fair value gap. Yeah, this is actually the sell side imbalance, buy side inefficiency. So this is what we call our fair value gap, and we have the swing high. So literally, I would wait to see price. Currently, price tapped our 50, but I could see this could be an area of inducement or area of liquidity. I wouldn't take a trade there. So I would wish to see price mitigating, either coming to this AVG or this order block. Then I would want to confirm my entry with my lower time frame, which is 15. Since my setup is on H4, I would go on 15 and confirm my entry. So I wouldn't really take a sell right here. I know price is currently reacting here, definitely around the area of the breaker block, but I'm not yet convinced. I would say it's busy engineering liquidity. This could be liquidity engineered, which could be easily taken out before the sell. So we are on a sell, but we have to wait to confirm it further as price moves back to deep premium to see that we can take it. So oil will be selling, targeting the same levels I talked about. The first target is the H4 swing low, which is 55.62, and the last target is the weekly swing low, which is around 50 55.15. So basically, this is the draw liquidity. So if we are to swing oil, I would wait for a nice confirmation entry. H4, I want to see price going back to premium, either within the area of the AVG or this area of origin, this order block. Then I would confirm my entry on 15 minutes. Then I'll be happy to swing it, to hold it towards the draw on liquidity, the weekly swing low. So this is what I had on oil. Yeah, we are resuming our bearish bias, targeting the weekly swing low. And as according to the fundamentals, OPEC is also planning to increase production with effect from next month. So we will be seeing oil prices dropping. We expect drops of oil prices amid all of this. Yeah, thank you. Have a great day.